Hey guys, welcome to the Trade Genius Podcast. Bob and Phil here. As always, guys, there's a lot going on. There's bad stuff brewing. We're going to tell you when that's going to boil over. Bob's been in the lab. You're not going to want to miss this. Let's dive in.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code PODCAST for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob, I've seen some stuff you dug up, really intriguing. And I think timing wise makes a lot of sense too for this recession that market is desperately trying to fend off. Let me kick it over to you. Take us through it.
Yeah. So, we've been telling everybody that, look, we probably have, maybe this week will probably end up being a red week just because we had 3 flyaway gaps. And then the 16th of November is a big day and the Fed's going to get a lot of money because California's 10% of tax receipts and they finally have to cough up their dough. And I think that's going to be probably one of the reasons why we may get a bit of a Santa rally. And Santa may go into January. And then things are going to get a little dicey because we're going to be in a recession. There's no way to avoid it at this point. FedEx is telling their pilots to find other work for the holidays at the regional carriers because they're not going to have enough contract work for them. So things are starting to line up. But that's not really interesting to me so much anymore, Phil, because the world really revolves around these derivatives. And Phil, if you could, the ETF options chart right now, this is absolutely insane. So the regular market is not driving this. What we've learned over the weekend now is that we have state actors engaged very aggressively in the buying the Mag 7 and shorting volatility. And they're using this mechanism of these option strategies to drive it. And we're reaching a point of basically peak idiocy. So I want to show you who this company is first. And it's not the first time this company has blown up. This is GEODE. I don't know if they say GeoDay or it's Custodians is the Japanese National Bank, Phil. Okay? How does a capital management company have a custodian that's a foreign central bank? All right? This is what they do. And they've been pumping. And Japan now is slowly disengaging from our treasury markets because of their own problems. Not that they don't want to help us, but it's basically every rat for themselves now. They're going to have to all hunker down. Well, this is just GEODE. I'm just going to look GeoDay for you guys.
I think it's pronounced Geo. Like the
guys
rocks.
Correct me if I'm wrong. But they've blown up before, Phil. Okay, and now they're leveraged again. So I say to myself, how often do these Volmageddon events happen? Because we had one, 2000, and we had one in 2018. I'm like, is this a regular occurrence? Do they just drive this thing to the wall? We blow up, then we get vol suppression again, and we blow up. So I went back and I marked off on the chart what I would call major volatility events. And this is what I've uncovered. And I went back to 2007. Before that, this wasn't a tool they used very aggressively, Phil. And now this is like the tool of choice. And if you notice here, I marked off where it was VIX 40 and VIX 30. And then also I used our standard vol stop and I did a monthly chart on this. And I've said, okay, I'm interested when vol blows through 40 because that's usually a major event. And then I said, every time vol stop got blown out, we had a major event. We hit a 40. So I started counting these moves and you could see them. The arrows are a little bit probably too light of a shade of a color for doing this, but you could see every time we've had 6 of these in the last 16 years, Phil. And so we have them every 2.66 years on average. Now, some are a little bit tighter, some are a little bit looser, but that's a good rule of thumb. This is when, when people tell you you, we're due for an earthquake in the next, 80% in the next 30 years kind of a thing. Well, this is the environment that we're in now. So look at the suppression we did. And usually, Phil, we get a 30 volatility handle about twice a year. Usually that's why people always talk about why does March blow up and why does September, October blow up? It's because volatility pops.
Right.
Okay. Well, they immediately got to 20. And look what they did last week. They went into full-on suppression mode. They panicked. But you can't keep driving volatility down. It becomes a self-defeating process, and then you get these massive explosions in volatility.
Mm-hmm.
And we had Volmageddon, and we had the COVID blow up. And you can just see where they've blown up in the past.
Right.
And so I said, okay, let's just say this is an average event. We should definitely have an event between now and July of 2024, Phil. Now, my view is that we probably won't have anything until at least maybe setting up for the end of that first quarter, but it could be as early as January. And it seems also tied with some of the changes in the derivative flows that the quants keep talking about. So I would say to people is that, look, you probably have between, right before Thanksgiving to right before Martin Luther King to get your life in order. Buy your insurance, get your last will and testament, get your money market card set up, because I think after that, then we're going to probably have a major vol event that usually results in a major market sell-off. And these companies, if they're this leveraged, Phil, you get very little warning. I mean, we could literally go from 20 to 30 in 2 days, 30 to 40 in a day. Even more, because once these things go, you can't really stop them. They're kind of like a Tesla car catching on fire.
Right.
They literally have to burn through their fuel before you can put these things back down.
Right.
So I want to throw this to you. What do you think about this idea of mine?
I think that it lines up with when we have credit events. A lot of times it's going to be September, October in that time zone or time frame, and then it's also March is a big month as well. So I think timing wise, it lines up with the March event if we're going to have one. And I think we have the makings for that, because what do we have? We have derivatives are skyrocketing. This geode company, I've been seeing a lot more things hitting the wires on it in terms of just irregularities with that company and the derivative exposures that they have. We have banks that are deeply underwater on their bond holdings. And the only reason why that's okay is because those bond holdings don't have to be liquidated. But if we get to that point, it's going to make '08 and '09 look silly. It really is. And it's going to make COVID look silly, because we have trillions and trillions of dollars that are tied up, that are underwater, and it's going to affect their balance sheet. Those guys cannot let those things be exposed. They have to hold them to maturity. They have to. Otherwise, this whole thing blows up. So then if that blows up, what's going to happen, right? It's going to be like March of last year. The Fed creates a special funding window. Liquidity shoots right back up. All of the legacy people say, oh, that's not going to add liquidity. Nah, it does add liquidity. We're going to get another market lift. Unfortunately, it's not addressing the issue. It's kicking the can down the road, but you can't fight it because the market's just going to lift on that, and it's going to affect inflation. And that's what it's going to be interesting, because Powell's staking really his legacy on getting this inflation down, right? They've really dug in on the 2%. I think you and I both agree that's probably not going to get met, because I think primarily because I think something like this is going to blow up. And I think March is a very probable month for this to happen. Why it happens in March, it's just kind of a seasonality thing. Markets tend to seasonally pull back at that time frame, and that usually exposes who's wearing what as tide goes out, right? And usually whoever doesn't have any pants on is exposed at that time. So I think it lines up really well. And then also too, the recession timing as well. I was more on board with maybe Q1, but you have to respect the fact that Yellen, not that I respect what she did, but the fact that the rates dropped by 2 rate cuts essentially, right? About 50 basis points was the drop on yields when she announced that she was pulling back from issuing the long end of the bond spectrum. So then, is the Fed going to fight back and say, well, we're going to hike in December? We'll have to see. If they do, then maybe the recession comes along that timing. But you have to be cognizant of, she could have pushed the recession back another quarter. It might not come till maybe Q3. I don't know. I'm just saying you have to allow for that. There's a lot of things that are going on right now in the markets that could affect that greatly. The Fed being one of them, if they decide to hit back. We just don't know. I think we'll know more after this week. But yeah, so I agree with the theory. I think your VIX timing is spot on. And I think July, I bet if they don't intervene, let's say, and print, and all things being equal, then I think we probably have an event first quarter, maybe second quarter. But my guess would be first quarter. And we are trading lower in July of next year.
Yes. Here the thing too is they're telling these leverage funds to deleverage too. So
Yep.
They may cause their own Volmageddon.
Yep.
But hey, really cool too. People that, this is a great chart. If you use our service, keep the VIX monthly as something you check now and again, because every time we get a Kona sell or we get a sniper sell, you're talking a multi-month free gift from Mr. Market to go ahead and buy SVXY or to buy UVXY puts, or to even probably to throw on, go out 60 days on some SPY calls and just sit back and smoke them if you got them. So it's a pretty cool tool that we have. I think you'd like it. I hid the Trade Force, Phil, just because monthly makes things a little too little choppy with the VIX, but look at these moves. These extreme moves are free gifts to you. And if you notice with the VIX too, it's easier to find VIX tops than it is to find VIX bottom. Okay, they just have to show up. And I think the only thing that you can use now is to set your vol stops. And when those vol stops break, they tend to run. Mm-hmm. And it's just if you notice, that's what it does, and it'll probably set you up. But it's very hard to go long volatility. You're better off just going into cash on your activities. But if you're more nimble, you can get into some SPY puts or SARK calls or something like that. And some of the best traders I know, they say, "Oh, Bob, I don't even screw around with shorting. I just go to cash and then I just buy later." And and you and I both know one person that's exactly how he trades, and he does extremely well. He's either all in or he's scaling out aggressively. And by the way, he scaled out aggressively last week. So so that's a really good strategy too, guys. So, but this is really cool, and I'm going to keep an eye on this, and I love to trade the volatility on the short side. I had 2 beautiful trades on it in October. The 4 set themselves up. It's still running. I'm out, but I'm waiting for it to give a reset for us and take another shot long. We trade that on a 30-minute. So if you trade with us, set your trade force up for the 30-minute on the SVXY or SVIX, and those are nice trades for you. You can pick up between 1% and 5% each and every time that thing fires a buy signal. So that's all I have, Phil. Really interesting. I think it's one of those things where we see the clouds coming. We just don't know how fast the storm's going to arrive, but it's coming.
All right, guys, well, let us know what you think. You think we're going to have a credit event in Q1 or Q2, or do you think we're going to have a recession in Q1 or Q2? We'd love to hear your thoughts and whether or not you agree with our thesis. As always, we'd love to hear from you, so put your comments below. Thanks for watching. Please hit like and subscribe, and we'll see you guys on the next video, and check out our specials over at tradegenius.co. Take care.
Trade Genius.